Right now, something massive is happening beneath the surface of global finance, something so big and so transformative that it could decide the future of money itself. And the crazy part is that most people have absolutely no idea what's coming. Governments are preparing to launch their own digital currencies, central banks are accelerating development at an unprecedented speed, and a silent war is emerging between CBDCs and crypto. This isn't just a battle of technology. This is a battle of ideology, of control, of freedom, of monetary power, and of who gets to shape the financial system for the next 100 years. If you're watching this video right now, you're already ahead of billions of people, because today you're going to understand the truth behind the global digital currency battle. CBDCs versus crypto. Who wins, what changes, and how this fight will influence your wealth, your privacy, and your financial future. Let's start with the big picture. Across the world, more than 100 countries are developing CBDCs, central bank digital currencies. These aren't just digital versions of cash. They are programmable money that sits on centralized digital rails controlled by governments and central banks. They allow full traceability, instant transactions, direct payments between governments and citizens, and total monitoring of financial activity. Meanwhile, crypto, especially Bitcoin and decentralized stablecoins, represent the exact opposite: open systems, permissionless transactions, privacy layers, decentralized control, and financial sovereignty for the individual. These two worlds cannot coexist peacefully forever. One is built on freedom, the other is built on control, and that is where the global battle begins. Why are governments rushing to launch CBDCs? The answer is simple: power. CBDCs allow governments to track every transaction, control monetary policy with surgical precision, freeze accounts instantly, distribute stimulus directly, and replace commercial banks when necessary. For governments, CBDCs solve problems. For individuals, they create new risks. Imagine a world where every financial choice you make is logged, monitored, analyzed, and controlled by an algorithm that decides what's allowed. Imagine a system where programmable money can expire, restrict purchases, or reward certain behaviors. This is the future governments are preparing for. And then there's crypto: unstoppable, decentralized, borderless. Bitcoin doesn't care about central banks. Ethereum doesn't care about monetary authority. Crypto gives individuals control over their own wealth. And that is exactly why governments view crypto as a threat, not to their financial systems, but to their power. This is why we're seeing massive regulatory crackdowns, strict stablecoin laws, surveillance policies, and global narratives pushing against decentralized systems. At the same time, CBDC research is skyrocketing. But here's where things get interesting. While governments are pushing CBDCs, citizens in many countries are pushing back. People don't want fully monitored money. They don't want programmable spending restrictions. They don't want a financial system where their economic freedom depends on political approval. That's why the crypto movement keeps growing. Every time a government introduces strict surveillance rules, crypto adoption increases. Every time a bank collapses, people move to Bitcoin. Every time inflation hits, decentralized stablecoins become more attractive. This battle isn't just about technology, it's about trust. Let's talk about the difference between CBDCs and crypto in real-world use cases. CBDCs are centralized, controlled, permissioned, and managed by governments. Crypto is decentralized, borderless, permissionless, and controlled by economic incentives and math. CBDCs can freeze your wallet. Crypto cannot. CBDCs can block certain transactions. Crypto cannot. CBDCs can issue negative interest rates. Crypto cannot. CBDCs can track every purchase you make. Crypto gives you control over your own privacy through tools, layers, and protocols. And that's why this digital currency battle is so important. Because once a CBDC system is implemented, financial freedom could disappear forever. But the story doesn't end there. CBDCs also have strengths. They enable instant cross-border payments, instant tax collection, instant distribution of government funds, disaster relief, financial access for the unbanked, and improved settlement systems. Governments see CBDCs as the next evolution of money: digital, efficient, programmable. And because millions of people already use digital banking apps, the transition will appear seamless. Most people won't even notice the shift from digital banking to CBDCs, but the impact will be enormous. Now let's talk about what's happening right now. Countries like China, India, Nigeria, Brazil, Russia, and even parts of Europe are accelerating CBDC pilots. The digital yuan is already active in major cities. India is testing the digital rupee. Nigeria is pushing the naira. The EU is discussing digital euro frameworks. The United States is exploring its own system through stablecoin regulation and federal digital payment infrastructure. The global shift is happening faster than anyone predicted. On the other side, crypto adoption is exploding. Bitcoin ETF inflows are rising. Institutional crypto adoption is increasing. Stablecoin transactions exceed Visa. DeFi platforms are seeing new waves of liquidity. AI-driven crypto tools are attracting new users. And decentralized finance continues to outpace traditional banking in speed, transparency, and efficiency. This means the world is essentially splitting into two monetary systems, one controlled and monitored, one decentralized and open. Let's go deeper into the psychological and social impact of CBDCs. If programmable money becomes the norm, governments could theoretically reward or punish financial behavior. Discounts for approved purchases, penalties for unapproved spending, carbon-based spending limits, expiration dates on stimulus funds. These are real scenarios being discussed in policy documents and pilot programs. If CBDCs become the foundation of the financial system, personal sovereignty becomes optional. That's why the crypto community is fighting harder than ever to defend decentralization. Now, let's talk about what this battle means for investors. CBDCs themselves may not create investment opportunities, they're government issued. But the shift to digital currency infrastructure will dramatically increase demand for blockchain technology, digital identity solutions, decentralized compute, and tokenized assets. Meanwhile, Bitcoin and decentralized stablecoins could surge as people seek alternatives for self-custody and financial freedom. If CBDC surveillance tightens, Bitcoin adoption will skyrocket. If CBDCs restrict capital movement, stablecoins will rise. If governments limit crypto access, people will turn to decentralized protocols. In every scenario, crypto grows. From a market standpoint, the launch of CBDCs could actually trigger a massive crypto bull run. Why? Because once the world moves fully digital, Bitcoin becomes the only global, borderless, permissionless money left. CBDCs compete with traditional finance, not with Bitcoin. In fact, CBDCs could push more people toward Bitcoin, not away from it. This is the paradox governments didn't expect. Now let's talk strategy, because you need to know how to position yourself. First, understand that Bitcoin will likely benefit the most from CBDC rollout. Bitcoin is the antidote to centralization. Second, decentralized stablecoins will remain essential for global commerce, especially in countries with failing currencies. Third, privacy coins could see increased demand, but also increased regulatory pressure. Fourth, blockchain gaming, metaverse platforms, and tokenized assets will grow as CBDC rails increase digital familiarity among mainstream users. Fifth, DeFi may evolve into a hybrid model where some parts are regulated and others remain decentralized. Sixth, crypto security will become one of the most important narrative categories as financial systems digitize completely. Finally, remember this: the battle between CBDCs and crypto isn't short-term. This is a decades-long shift. We are witnessing the birth of a new monetary era. CBDCs represent control. Crypto represents sovereignty. CBDCs represent centralization. Crypto represents decentralization. CBDCs represent programmable restrictions. Crypto represents permissionless freedom. And in the end, people will choose based on their values, not just convenience. So stay educated, stay prepared, and stay ahead. Because the people who understand this digital currency battle today will be the ones who thrive in the financial world of tomorrow. Thank you for watching, and I'll see you in the next video.